Chart number 1 brace for a profit of 53%. This company is from technology services sector. The chart has been in downtrend for a while by creating lower peaks. However, this week it had shown a promising chart pattern indicating the breakout. The technicals are aligning, suggesting the surge in the momentum. Let's take a closer look and identify entry and exit points. Let me convert the chart into the line chart and tell me if you can see any chart pattern. And here it is, the trend reversal pattern, that is inverse head and shoulder. If you can see, the pattern has taken longer time to form, that is from February 2022 to November 2023. This is more than 1.5 years now. Always remember, the bigger the pattern is, the impact is higher. So impact is always proportional to the size of time duration of the pattern. Before we proceed with any target calculations, let's quickly check main two parameters that will allow this trade to go on. Is the stock outperforming the index? Yes. Is the volume indicating increasing? Yes, there is an accumulation of the green volume bars in recent weeks. So what would our trade look like? This is the breakout line. So when weekly candle closes above the breakout price, that's when the trade can be initiated. Our buy price would be somewhere around 53 to 56. Stop loss would be breakout price minus ATR. So that is 49 minus 4. So that would be 45 will be our stop loss. Target would be calculate the depth of the head and add it to the breakout price. That comes out to be 76. In gains terms, this stock can potentially give us a profit of 53%. Easy? Second chart with another 53% profit is Scalar. The company operates in security data processing services, and let's look at the chart. The chart has been in downtrend since the end of 2021. However, if you look at it carefully, it has been successful in breaking the 1-year resistance recently, and hence the chart has qualified for the fresh breakout this week. Let's also check our two usual main parameters. The stock is outperforming from the S&P 500 index, yes, and look at the impressive volume bar at the breakout candle. That is a clear indication that chart is going to outperform. With that in mind, let's look at our entry, exit and target points. So really, what would our trade look like? This is the breakout line. So when the weekly candle closes above the breakout price, the trade can be initiated. That means our buy price would be around 198, and because the breakout price is about 188. The stop loss in this case would be 188 minus 15, that is the ATR. So the stop loss would be 173. What about the target? So target would be the depth of the bottom, and we add that to the breakout price. So our target would come out to be about around 189. That would really give us the 53% of the profit. Chart number 3 is United Rentals with another massive potential return. The company operates in finance, rental and leasing services. This chart has also given a fresh breakout this week. Let me change it to line chart and tell me in comments if you can identify the chart pattern. This is the easiest of all the 3 charts we have discussed till now. It's an ascending triangle pattern. This is a continuation pattern. So what does that mean? Whenever this pattern is formed, the chart will continue the trend given enough momentum. If I zoom out, you can see the chart has been in the uptrend since many years. And now with the ascending triangle pattern, it will continue to be in the uptrend. Let's check the chart momentum and the volume. That will confirm the pattern that it will continue and will give it a good momentum. The comparative RSI looks to be higher than the index. And look at the volume. That is also promising. It has formed quite a lot of green candle bars that are very, very consistent. Now let's zoom in and understand our area of interest, that is when to enter, when to exit, and what is our risk. This is the breakout line. So our breakout price would be somewhere around 484. Now the breakout candle, the price has gone above the breakout line. So our buy price would be 502. And if we calculate our stop loss, that will be 484 minus 36. So 36 is the ATR. So the stop loss would be somewhere around 448. And what would target look like? Calculate the height of the triangle and add it to the breakout price. That comes out to be 631. So in gain terms, this is again a potential high return gain, which is giving us a profit of about 31%. Isn't that really easy? The fourth and the last chart for today is Amphenol Corporation with potential gain of 29%. This company operates in electronic components technology services. The chart is another example of a continuation triangle pattern. If you look at it carefully, it's a multi-year breakout and the pattern has taken 2 years to form, so the impact will be higher and for longer duration. It's a fresh breakout, so definitely a potential stock for this week. The chart is definitely outperforming the S&P 500 index here, as you can see, and the volume is in good shape as well. There are multiple candles, bars of volume that are completely in higher shape. Now let's quickly look at what our trade would look like. What would the entry, exit, and the risk management? So this is going to be our breakout line. So the breakout price is at about 88. Now the candle that is broken above the breakout price, that would be our buy candle, so that is around 92, and stop loss would be somewhere around 84. And by now you would know how to calculate the target price. So again, the target price would be measure the depth of the triangle or the height of the triangle and add it to the breakout price, and that take profit price would come somewhere around 112. So this is another interesting chart that would potentially give us 29% of profit. Now let me know in the comments below if you would like to see more of such breakout stocks. If you enjoyed this chart reading, give it a thumbs up and hit that subscribe button. Until next time, happy investing.